Today we have a hot topic in the world of finance. The recent move by the BRICS nations to sell a whopping $17 billion in US Treasuries. What's behind this decision and what could it mean for the global financial landscape? So stick around because we're about to dive deep into the details. Now, first and foremost, let's get into the basics. Obviously, we know what BRICS stands for. It's Brazil, Russia, India, and China, and South Africa. And these countries collectively hold a significant amount of foreign exchange reserves and a substantial portion of what was invested in the US Treasuries. These are often seen as gold standards of safety in the world of investments. Now, these BRICS nations have made a move that's turning heads. They collectively decided to reduce their holdings in US Treasuries. But why, you probably ask? Well, let's break it down. One reason behind this is the decision of diversification. BRICS countries are looking to spread their risk and not to be too dependent on US assets. With geopolitical tensions and trade disputes in play, it makes sense to be cautious. Another factor at play here is the rising yield on US Treasuries. Yields and bond prices have an inverse relationship, and when yields go up, bond prices go down. This shift in yields can lead to capital losses, and it's got investors rethinking their positions. And then there's the US dollar itself. As these BRICS nations sell off their treasuries, it can put pressure on the dollar to weaken. This can have an impact on exchange rates, making US exports more competitive but potentially raising concerns about inflation. So what are the potential consequences of this move for the United States economy? Well, they're not to be taken lightly. For one, it could lead to higher interest rates when there is less demand for treasuries. Their prices fall and yields rise. That could mean higher borrowing costs for the United States government, businesses, and even consumers. But that's not all. Market volatility could be on the horizon, and the treasury market is one of the largest and most liquid markets globally. A significant shift in demand can lead to market turbulence, affecting not only bond investments, but also the broader financial market. And let's not forget about these fiscal challenges. The US government relies on the sale of treasuries to fund its budget deficits. A drop in demand could make it more challenging to finance government operations. And plus inflation concerns, if inflation starts to rise, it could eat into the real returns of US Treasuries, making them less appealing to investors. The BRICS nations' decision to sell $17 billion in US Treasuries is a big move in the world of finance. And it's all about diversification, geopolitical dynamics, and concerns about the US economic policies and rising yields. This is not the only time they sold treasuries. The total for this year has been a total of $123 billion combined. And from what everyone is saying not to listen to BRICS, it seems as if the world is listening and we aren't. Now, if you like this video, check out this next video right here.